I had been warning for weeks before the recent sell-off that on or before March 11th, something major was going to happen to the markets based on patterns on multiple charts. SPY fell into correction territory, down just over 10% from all-time highs, and QQQ was down almost 14%. Has the market found a true bottom, or is there much further to fall from here? Join our growing community as I cover market analysis on SPY, QQQ, Bitcoin, and many more tickers. Nothing I share is financial advice, and you should consult a licensed financial advisor before making any financial decisions. In today's market mealysis, we're actually going to be going in reverse order, starting with the ADD, the market breadth indicator, and working our way back to SPY, QQQ, Bitcoin, and everything else. Ever since January 15th, this resistance line has held up on the ADD for the overall market, with no closes above it this entire time. SPY and QQQ hadn't even hit all-time highs yet, which tells me that while they were still going up, the overall market was losing breath for months. And what does that mean? It shows just how top-heavy the market has been with big tech, as the larger drop on QQQ confirmed. The overall market finally broke above this resistance line on Friday, March 14th, with this bullish divergence here predicting the move. So what was holding the market down this whole time has likely been broken. However, notice what pattern this has formed near this overbought condition of plus 2,000 on Friday. If we draw an upper resistance line here and a lower support line there, we've formed a bearish rising wedge right into Friday. Meaning I would expect the market to at least pull back from its current level based on this short-term bearish pattern and at least retest this previous resistance line. If you've missed my previous few videos or community posts where I've covered key patterns on the VIX, SPY, QQQ, and Bitcoin, please go back and check those out first so you'll understand everything I'm covering here. And if you like what you see, please consider subscribing and tapping for notifications so you won't miss any more market-moving insights. First, I want you to take a look at the RSI for the VIX on the 4-hour time frame. And you see this purple resistance line? The VIX rejected off of this every single time until it broke out here, and it broke out basically around that 50 mark. Then, every time the RSI has touched it from above, it's shot back up. And this happens consistently with other RSI patterns that I've charted. Notice how close it is getting to touching that line again in very oversold territory at the same time that the VIX is touching this multi-year resistance line that we've covered before. On top of all of this, the multi-month descending triangle pattern with a pattern target of roughly 68 is nowhere close to being met. I think at the very least, the market is likely to have a sharp pullback soon. Ultimately, the VIX may actually try to retest this previous resistance line between about 15 to 16, but if it acts as new support, we may finally see this pattern finally play out. Daily support on the Ichimoku cloud is very strong at 2050, and I would be very surprised if we broke through that without a fight. And if we zoom in on the 1-hour time frame, notice what pattern this appears to be forming right into that key support level. I don't think it's just a coincidence that it's forming a bullish falling wedge pattern right into that strong support. There isn't a lot to show on Dixie, the dollar strength index, but what we are seeing is extremely important. Notice on the 2-hour how Dixie has been consolidating here for days. Dixie absolutely just sliced through this key support line in green that I covered many times, which also converged with this key support line in yellow and the 200-day simple moving average here in purple right around 104.95. And Dixie is now resting on key weekly time frame support between about 103.40 to 103.70. If the whole market has been selling off alongside Dixie, imagine what may happen if this key support breaks. It could make a quick drop to the 200 weekly simple moving average around 1235. And if that didn't hold, it could make a quick break down to about 100.20. Alternatively, if support does hold up, we could see Dixie retesting the 100 weekly simple moving average around 104.30. And then the previous support line in green and this key level in yellow around 104.90. I can't help but feeling like the markets are setting up an elaborate bear flag leading to the bull trap of a decade. QQQ broke out of this bearish channel in light blue that it was in somewhere around 473. However, based on this multi-month rising wedge pattern, QQQ is still targeting roughly 429 to 430, which is a key demand zone. If you look at the RSI on the 4-hour time frame, it's already getting close to overbought condition. The market made a double bottom around 466 with bullish divergence, and it's heading towards this key level of about 484.50. And I think it's likely to struggle to get above that. If it can get back above that, I could see QQQ trying to retest the previous support line of this main ascending channel in purple, now around 502 to 503. And I'm keeping in mind that there is a supply zone there between about 500 to 505. If QQQ got back up there but couldn't break back into the channel, I think it would drop very, very fast. And I know there's a lot of different levels charted on here, but if we throw up a Fibonacci retracement here in yellow, if we notice how the 50% retracement would line up perfectly with that old support line around 503 on Wednesday, March 19th, the FOMC decision day. Coincidence? Maybe, but we'll have to find out. And in addition to the FOMC decision on Wednesday, Friday is the quarterly triple witching event where options and futures contracts all expire at the same time, and it often leads to intense volatility. When we look on the daily time frame, we're actually still below the 200-day simple moving average at 493.30. And you know what they say, nothing good happens below the 200-day simple moving average. And I gotta look left to show this to you, but on the 1-hour time frame, look how this lights up, this light green channel that went sideways. If we move to today's price action, this is that same channel right here. And I can say definitely from experience, extended trend lines and extended channels often typically hold significance. So it's no coincidence that price struggled to pierce this previous support line of that channel, even though this is happening weeks later. And on the weekly time frame, I've shown many RSI patterns before. QQQ broke below the support line in strength and moved into deeply oversold condition. So it may move back up and retest this previous support line. And this is one reason that I think QQQ could potentially retest this previous support line of this long-running bullish channel in purple. Notice how the rising wedge pattern target in the low 430s would put QQQ deep into weekly support right around the 100 weekly simple moving average, which is currently at 434, and into this key demand zone. This is where I would be looking to sell any longer dated puts. And two of my rules and reminders are this: patterns are not guaranteed to play out fully, and if they do, you aren't guaranteed anything more, even though they can overshoot. So I'm looking to see a capitulation move to the downside at some point that flushes out the rest of the short-term bulls and where the shorts finally close. SPY also broke out of its bearish channel around 558 and actually made a lower low, but essentially double bottomed around 551 with bullish RSI divergence. Roughly 565 is a very key level, and I believe SPY will struggle to push through it without at least a pullback or consolidation first. And if I throw up a Fibonacci retracement here in white, again, I apologize for how busy this is, but I like to keep all of my key levels on my chart. I don't delete things. Notice how roughly 565 matches up perfectly with the 23.6 retracement. And notice also how its RSI on the 4-hour time frame is also getting very close to being overbought. If it can break above this 565 level, I could see it pumping to the next supply zone that's between about 575 to 582. And that 50% retracement was basically around 581. So that lines up as well. And just like we had that sideways channel on QQQ, we've got one on SPY here as well. And the lower support line would be around 583 if we get up there. So I could see it rejecting off of that. If SPY could actually show enough bullishness to push through all of these different resistances, I could see it trying to retest the previous multi-year support line here in light blue, somewhere around 604, give or take, where I believe it would reject very, very sharply. Similar to QQQ, SPY is also below its daily 200 simple moving average, currently at 572.55. That could also act as dynamic resistance. On the weekly time frame, I pointed out this ascending triangle before, many months before, and we see how we broke the support line on this and went into extremely oversold conditions, so that might try to retest as well. And I recently identified another key trend line on SPY that goes back to the March 2020 COVID low here in light gray, and it's held up with multiple touch points. The giant rising wedge pattern that we've covered before has a target of about 522, but I think a more conservative target due to how much support that we have in this area and when it's actually likely to hit would be about 531-ish, which would line up with that support line. And I've seen that image floating around that compares the current market structure to the 1929 market crash, where the market falls like this, bounces a little bit, has what they call a dead cat bounce, and then just plummets. And although it's absolutely possible it would take absolute market panic incited by something that shocked the entire world, and I'm just not betting on that. In fact, I hope that nothing like that ever happens, because at that point, stocks would likely be the least of anyone's worries. The good news for IWM small caps is that it has already touched very strong support on the weekly time frame. This key level of 200 even, where both the 100 and 200 simple moving averages converged, and deep into Ichimoku cloud support. It was in this minor bearish channel in light blue for days, and then it went so bearish, and then it just kept trying to retest previous support and rejecting. Now it appears to have closed just barely above that support line around 202.40. Notice also how its 4-hour RSI is already getting close to being overbought. I think it's likely that IWM will retest this previous resistance line here around 207.50, 206.50, etc., depending on what day it pushes up. And if it can break it, then it has to contend with what used to be demand, now likely flipped to supply between about 209 to 215, with a key level of about 211.50, which lines up absolutely perfectly with the 50% Fibonacci retracement here. Ultimately though, the most important thing to note is that IWM also broke out of its bullish channel here in orange that it stayed inside of since December of 2023. And when we zoom out on the weekly time frame and we look at this previous support line on the RSI in purple, we can see how it held up for months, then we broke below it, retested it, and rejected from beneath, and that's when we saw IWM start to fall rapidly. So it seems very likely that even this bounce here is just a technical oversold bounce. I used to cover silver more frequently in my earlier videos, but by request I'm revisiting it tonight. Notice this massive symmetrical triangle pattern on the weekly time frame that goes back to October of 2008 for the lower support and May 2011 for the upper resistance. If we assume that this breakout is legitimate and not false, then it indicates that SLV is targeting about 63 in the years to come. When we zoom in to the 4-hour time frame, we can see that SLV was in this bullish channel in orange for multiple weeks, and then it finally broke the support line on November 6, 2024, came back up, retested it, noticed that this was new resistance, and then rejected. Now we can see this multi-week bullish falling wedge on the chart, whose pattern target is about 3130, just below this key resistance level around 3150. And I don't think it's just a coincidence that SLV is forming this smaller rising wedge right up into that resistance, with a pattern breakdown target of roughly $1.50, which would place it above the support level around $29.50. And if that support holds, I could see it consolidate for a while and then possibly try to make a run for breaking that key resistance up here at $31.50. Alternatively, if this support breaks, I could see the next key level being around 28 to 28.50. And we can't take a look at silver without taking a look at gold. Looking at the chart of GLD, notice this very well-defined bullish channel on GLD. It recently made a new all-time high at 276.30, but If this channel holds up, price could get to about 282 to 283, but will reject sharply off of this upper resistance. If history rhymes, it means that GLD would be likely to retest the previous all-time high at 276.30. Then it could potentially test this key level around 272.30, then possibly about 265.50, and then the very key level of around 261.40, which by that time may actually line up with the lower support line of the channel. The symmetrical triangle pattern target for this breakdown is around 68,000, or an 18,000 point move down from where it broke the support. If Bitcoin is retesting the pattern, it may reject if it hits around 87,000 to 88,000, depending on where it hits this extended resistance line. Then it may continue to fulfill its pattern target. Alternatively, if this was all just a false breakdown, Bitcoin may now be targeting about 95,000 when we move the target from where it actually bottomed, which would also line up with this extended support line of the triangle. And a lot of times people say patterns don't work, not realizing that targets are usually not met in a straight line, but they get hit eventually. Markets don't move in straight lines. If you've missed my previous videos or posts, this multi-month rising wedge is targeting a final drop for Bitcoin to about 60,000 over the course of multiple weeks to months. We also shouldn't be surprised to see Bitcoin attempt to bounce from here because we basically hit the halfway point of this rising wedge target. And from what I've witnessed with almost every single pattern, when you get to the halfway point of the pattern target, especially for these higher time frame patterns, it does have a counter trend bounce followed by the real move. Taking into account everything that I'm seeing on every chart, it leads me to believe that even if the markets bounce from here, the bulls don't realize there's been a significant trend shift, and it would take a lot of work to reestablish a new trend, and I will be trading accordingly. Stick around for today's trading rule to live by. Best of luck, cool cats, and God bless.